Hello guys, glad to have you on board again today. Hope you had a great weekend. We're going to do as usual and prepare for the upcoming week. It's going to be a big one, not just for the financial markets, but also the cryptocurrency sector. Might have some kind of an interesting week ahead, just because we've been ranging as expected on the previous week, and at some point we're going to have a release in terms of momentum, and I don't think this is going to be lasting for more than the week. So we should have some kind of decision about to come in the next following days, and I even expect those to happen probably today or at least until tomorrow. So we'll see about that. First, we're having a look at the weekly candle close. So not that big of a deal as expected. We have another upcoming week. Another up week. Quite a great week actually, because we generally don't do that kind of thing after an impulsive week. We generally don't pile up another one right after, which we've been doing, which suggests to me that we might have a little bit too much in terms of volatility, and that doesn't sound good. Just to set things straight, volatility into a crashing market is nothing like a good sign. It means that we're still having emotions in that market, and I clearly can see that throughout what I see in TradingView or in Twitter. I mean, people are getting excited again. We have volatility. It doesn't sound like the end of a crashing market. Most likely a market that is rebounding once again. So there's still the same psychological effect in behind those moves, which means this is still kind of FOMO trading. People are buying something because they think this is going to go higher, and this is just, and as always, a speculative perspective. And as long as we have it, as long as you have speculators, means that you have very low probability to be ending the crash. So whenever I was facing doubts near that support, saying we might have a little bit too many sellers in that market to just break down that support, and we might eventually hold it, I was in a contrarian kind of approach. I mean, people were selling, so I decided to buy. And I think that right now it's just still this same ongoing pattern, which is trading crashes. And whenever you do trade crashes, you don't want to see either panic or greed into the buy or selling side, which means I had greed for sales in there. Means that I saw most of guys saying, okay, this time we're going to break down the support. I saw sellers piling up near that support, and once again we just fucked them up by just wrong footing those who've been aggressively selling a support before it broke down. We tried, just to set things straight, I've been buying before the bottom, so I've been buying a little bit too early, and the market did try to break that down, that support, twice, and we failed twice, and of course afterwards we've been taking out, we've been short squeezing once again. I saw kind of a tweet passing by saying 160 million position of wrecked sellers in there, so still pretty much again the same thing. I mean, we've been wrecking sellers, and now that we've been wrecking them, everybody thinks this is back to euphoric. I think this is just volatility, just people playing with the retail traders. They're buying when you're selling, they're selling when you're buying, and I think that's the most rational to just do the same. This is just doing the opposite of the consensus right now. That must be the most rewarding. So we'll see if this pattern keeps on playing, because that's generally the pattern that is rewarding when you're trading a crash. You just want to do the opposite of the dumb traders, and dumb traders right now are buying, and I want to be a seller. So just not right now. I'm going to talk about this today. What are the prices that might be interesting to forecast some potential selling entries? I mean, price in which the risks will be limited enough to get in, and just don't take that big of a stop loss if you're wrong, and take a nice gain if you're right. Because that's what speculating is about. As usual, I'm no magician. I don't know what the market will be. I don't know how the market will do, and I moreover don't know any clue. Don't have any clue about the timing. But all I can say right now is that we've been moving higher, and we've been doing it a little bit too fast for a market to end a crash. I would have been a little bit more confident if we had a slow grinding move heading to the resistances slowly but steady and breaking the 10,000s. I mean, we can still break up the 10,000s, but I see odds of this to happen just been narrowing to dangerous levels as we've been moving up too fast with too harsh emotions. If we go into the daily chart time frames, you can see where the wrecking positions have been taking place. It's just like the same time we've been wrecking in here, wrecking there, and trying to get final stop losses in there. But anytime we failed to take additional stop losses, we just failed to find the gas we needed to go higher. And I think this is just pretty much the exact same scenario that is ongoing. We've been wrecking first time, wrecking a second time. I think a third time is about to come, but that may probably be the last one. So we're going to identify potential resistances that could do the job to eventually forecast some selling entries, and this is what I'm going to talk about today. So first we have a look at the technicals. We're still in the bearish oscillations. We've been breaking the target, but as I said, I think that signal went pretty much too early. Shouldn't have triggered, and I think where the bearish signals should have triggered is right here. So just to be honest in here, if I just correct what I think the sine wave should have done, it should have done this, taking the lowest candle close back to that level where we should have triggered the selling entries, or the bearish cycle should have triggered right here, which gives us a maximum target right here. Okay, this is where normally if you just transpose that bearish cycle from here to there where it should have triggered, you would have had a maximum target for the bearish cycle up here, and this is where I think the market should try to reach out to. Not getting there, I think I've got very low probability to get to 9,600, but I think the level right below, which is right here, 85.4% retracement, which is maximum 9,300 approximately, I think this is where we have a very strong and very interesting price to sell. We also have that level, intermediate level, which is 9,000 approximately, in which I think selling might be interesting. Consider that price a price area in which I want to try selling the market. Of course, that will require to have a signal to do it, not a daily signal, but more likely a 2-hour chart signal would be more than enough to me to get into selling that area with a very tiny stop that might be set. If I'm taking 9,000, I think this is where I'm going to put the stop loss. If I'm taking 9,300, I'm not going to take a stop loss at $150. In that case, I want to set the stop loss right above the next level. So for those who want to play at low risk, I think this is where the stop loss is theoretically unreachable if the scenario is valid. But those who, like me, will try to get a little bit more. I think the minimum stop loss sizing is approximately 9,500 or 400. And that's the most aggressive stop loss you could set. Okay, don't set it below. Any price below there could be just taken down. Remember that the market will try to get the stop losses. This is how I'll try to pump, and taking the stop losses of those selling too aggressively. So you don't want to be among those guys who might be just stopped right at the market top. Okay, so in terms of position sizing, I would pretty much recommend, even though I cannot recommend anything, but I'll tell you how I'll do it. I'd rather like to reduce the leverage and reduce the gains I could produce, but putting a further stop loss than just narrowing the stop loss and being stopped out. Okay, so I think you need to be broad in here and let some room for the price to work out. The magic things is in here regarding the altcoins in here. So we're going to take the Ethereum as a reference, as I think everyone else is just going to follow this one. Or another one is going to trigger. I don't really give a shit about who is going to trigger the next move, but this is more likely about this. How are we going to play that shit? Is this already ready to get a fifth bullish impulse that I think is going to break that resistance, and probably this one in a row, and gives us to that target, as in which, just as the Bitcoin, if we get there with Ethereum, I'm going to take my profits, no questions asked. Not going to last into that market. We've got a resistance, we've got a technical price pattern. So if we go there, I'm taking my profits, no questions asked. Of course, if I have some kind of signals in there near those two resistances, I'll take profits in there as well. But that's how it is. The price I want to buy with much more confidence. Sorry, I don't remember where I was right before getting that call. So anyway, I'm just gonna keep on moving. But I think I was talking about that red, that big blue signal in here is the one that I'd like to take. Because just to set things straight, I'm using a Elliott wave forecast as a technical framework. So which means this is what I use to forecast the next potential waves. And if that is what's about to come, and if we eventually find some bearish reversal in here, that'll mean that we'll have made a 1, 2, 3, 4, 5 bullish impulse with a wave 4 into wave 1 territory, which means we'll have made what we call the leading diagonal. And generally after leading diagonals, you get a kind of a B wave pullback, can be either very deep or just some kind of flat structure, but we need to have two bearish impulses afterwards, okay? And whenever we'll have cleared those two bearish impulses, this is the B point I'd like to buy. Because when we'll have terminated the consolidation after the leading diagonal, the next wave is probably going to be a pretty much impulsive one, and this is the one I would like to get. So in terms of, let's say, risk-reward ratio, this is where I like to take much more confidence and leverage position. This is obviously just taking some gains to pay for the next stop loss if the scenario is just going as expected. So that's pretty much the same for other cryptocurrencies. I'm still buying the Ripple as well. So I'm having Ethereum, Ripple, and IOTA for now in my portfolio. I'm no longer having BTC. I'm just having real BTC. I'm not speculating again on BTC. I still have a few Bitcoins left in my wallets, but that's all I have. I mean, these are the ones I'm pretty much ready to hold at some point. But as I said, if we're going to higher pricing, I'm ready to sell those as well, just to get full fiat working out the price area. Okay, so pretty much putting my money into altcoins right now with 50% Ethereum, 25% Ripple, 25% IOTA, as far as I can tell right now, because IOTA is the most speculative one. If it has to fail, it's the one that is going to produce the bigger loss. But if it works out the way I expected, I think this is the one that is going to trigger the biggest gains. And I expect this one to be probably heading toward plus 25 to eventually plus 40% gains, and getting to that resistance area in here, that means, as I said, a 40% drop. Sorry, a 40% upward move. And this is something I'd like to take, of course. So if I have to reinforce after validation of the scenario, I think IOTA is the one I'll reinforce the most. Okay, because I can pretty much expect something like that. Just like the Bitcoin did. We had some kind of short squeeze in here where all the buyers took all the sellers' stop losses at once. And I pretty much expect the same price action. Nothing close to this afterwards, but from what I can expect, we should have a pretty fucking bullish move. Something that, like back then, has been triggering a 25 to 26% upward move in a single day. And I expect the market to do just that. Head toward that area, taking all the gains, and I think in the end this is the area in which I'd like to take the profits, but I think I will just take those if we get to that price in here. So first price to me available is 1.27. I think heading in there I'll keep on some IOTAs, but if we go there and find some bearish signals, I'm ready to take the profits and just get out. But at the point right now, it's just waiting to have some kind of, yes, this is exactly what I want to see. I think the crashes are not over, and that we'll still have some downward move to come. But I think first, we might have another pump into the altcoin, a final pump, just to get the stupid traders in below resistances, and then we're just going to flush out all the stop losses at once. So I still forecast the altcoins to be stressed at some point. I mean, heavily stressed. I mean, taking all the stop losses in a very brutal stop taking move. But before that, might require some buyers to get in with leverage. And in order to do this, we need to make FOMO trading into retail traders. So at that point, I think having some brutal pump like this, but a much shorter one, don't expect something like that. I don't really see the altcoins pumping for a month. If we just start on those, I think it's just going to last a 1 week or a couple at best, and then we're probably going to have a reversal, I think, before the end of September, the end of August. I think September might be a timing for the altcoin to just collapse, and we'll see about that. But I think right now we're still having too much speculation regarding the altcoins, too many altcoins, so I don't really think that the crash is still over. And from what I can see right now, we're just still trying to do the exact same patterns, just triggering euphoria after triggering panic, and euphoria and panic and euphoria and panic, until we actually just cleared all the speculation by just washing them to the bull, bear, and just taking too many stop losses that at some point the speculators would just say, okay, I just let go and I stop trading this. I'm tired of being washed out. And at some point, that's the moment I want to take their losses and just hold the price. Okay, so I know that might sound brutal by the way I'm saying it, but that's how it is. I mean, trading is acting like a vulture at some point. I know it's not pretty, but that's how it is. And if I want to have nice price and interesting prices to hold, it probably means that someone will have to take a loss according to this, or make a bad decision. Anyway, now that being said, we're going to move on to the conventional markets, and still trying to figure out what the hell's going with the US indexes. Pretty much of an unexpected Friday ending session. There's been erasing most of the weekly gains in a single move after releasing a 4% GDP. But we're going to just crack down that number and see what that means. So this is what we had. So this is not GDP, this is what we call price index of the GDP, which means this is broad-based in inflation numbers. And from what you can see, we've been piling up to 3.2%, which means inside the big 4% number we had on the GDP, most of the production rising were just linked to two sectors. First one is this one, is the price index has been rising, which means we're having some inflation. The inflation that, as you know and as you remember, is what has been causing the market to collapse in January. We were fearing some pickup in inflation, and the fact that inflation will be out of control and that the Fed will have to raise the rates at a faster pace. So back then, that risk wasn't really real, and the market just bought it out afterwards. But right now, what we're seeing is that we might have the fucking inflation actually there in a broad-based remark. And of course, this is just in a single month release, and we'll see how it goes the next month. And that will be really, really, really important. Because if for some reasons we were about to have another release at 3.2%, which means that the inflation we're seeing throughout the CPIs and things like that is just not broad enough to figure out the real inflation. And at some point, if we have a broad-based inflation above 3%, means that the Fed is pretty much fucking late, and they'll have to raise faster. And if that's the case, then it might be risking to trigger the credit bubble. And as you know, at the end of economic cycles, we've been multiplying the risks. It's nothing close to looking at what's wrong or what's going wrong when you're in a growth period. I mean, just to set things straight, when you're right here in the SPX, and I've been really clear on this all along, when you're in that period, this is what we call the growth period. Right in here, you don't give a shit about anything that's going wrong. Anytime the bullish perspective remains fully there, which means any pullback is a buying opportunity. And just as I said, I've been selling those market stops, but I've been buying eyes closed the lows afterwards. And I was one of the latest stupid guys who were there saying, okay, fuck it, it's not going to be bearish, just buy the lows. When everyone was just forecasting the end of the world and the fact that we'll have another fucking recession. So just once again, I'm no damn perma-bear. I'm just a trader. And as I said, I'm just trying to figure out where the risk reward is. And right now, I think it's clearly bearish, and that all you can trade right here is just doing nothing or trying to trade bearish. And I'll see, the future will tell if I was right or wrong. But from what I can see right now, things are just twisting, and it's not doing pretty for the bulls. I think they're trying to exit no matter what, but they are trying. I still think that buying dollar, buying US equities was the scenario that the market tried to sell to every asset manager in 2018. The fact that we'll just sell volatility and get some tranquility past all the summer, and probably gonna try to push higher at the end of the year. By that, I mean, this is what I've been seeing lately. Let me just try to fucking find it out. It was, I think, in the VIX. Got headlines on yes, Wall Street sleepy summer could be setting up for the next stage of stocks bull run. So what that means is basically Wall Street's been thinking that by just doing nothing throughout the summer, we'll have an end of a pretty bullish end of that year, because statistics suggest so. The fact that when we have a sleepy summer, we generally have a bullish end of year, and we're generally terminating in a positive year. So, once again, this is just pure statistical fiction. Means that the market is trying to project a number just because it had never happened in the past. But just to set things straight, many things never happened in the past and yet happen in the market. So it's as stupid to say every time we had a bullish summer, we had a bullish end of year. Yes, but what the fuck? You're just going to trade by this. If you have no signals to buy, you just don't buy. And from what I can see, the buying signals are about to be invalidated, and this is something that you just don't want to avoid. So we've got clear taking profit signals, which means anytime we go below resistances, the buyers are taking their profits. We're below resistances, we've got nothing that helps us pushing towards those prices, so why the fuck would you just buy a resistance? I mean, we're nearly finding the end of a potential trend, and not to say a monthly fucking trend, so this is not the time to buy aggressively under resistances. And moreover, if you're just forecasting to take an additional 3 to 4% gains, I mean, how the fuck can you risk a 10 to 15... I mean, right now it's a minimum 15% drop if things are going dirty. So how can you risk a 15% drop just to expect getting a 3% gain? This is nothing close to rational. So this is not what you do unless you're taking excessive amount of risks. So if you can buy, as I said, but if you do buy, just buy short term and don't take any kind of risk like 10 to 15% to drop. If the market is dropping, everyone is going to trigger stop losses in the same time, which means we're going to have a pretty falling shopping knife. Being cautious was the only reaction to be on those resistance pricing, and as you can see in a weekly perspective, we're right into the red area, and we tried to extract bullish, we failed it, and we closed right back into the red area, which means what we've been doing in the daily chart time frame is just a fucking fake breakout. We just broke up, hold the candle close right at the top, made a doji, and get back to the red area. So what we've been doing in here is just triggering stop losses. And as I said, I haven't given mine. I was forecasting the market to do just that shit. I faced a danger area, as I said. I'm a risk assessor. This is my job, to assess the risk and say if I'm getting in or getting out, if I'm right or if I'm wrong. And from what I can say, I've been saying, okay, I don't think I'm wrong. I think the market is trying to take the stop losses, so I'm taking a partial loss if necessary, and I'm narrowing the stop, and I'm I'm putting the stop losses further away. And that was a good choice because the market made that brutal reversal, and right now I think I'm having something to manage the risk. So I know where the risk is, I know where to put the stop losses. If we're getting back there again, I think this is just bullish. Okay, if we go there, I got nothing else to do as a bear. It's just that I'll be losing the scenario. I mean, I can be right, I can be wrong, and if we go up there again, means that I'm wrong. If we're not going there again and fucking up some supports, means that I was right to just push the stop losses further away. Right now it's just waiting to see how this plays out. We've been trying to break up, we've been failing, and the question right now is either we're going to extract that red area from the bottom, and if that's about to come, then we're just going to fuck up all the bulls at once, and we're just going to cross the DOM zone into a single straight line, just like that. If that is a market top, then this is what I think this is what's about to come next. And for those who are forecasting that stupid thing that is, if market from April to August is bullish, then we'll have bullish August to the end of the year. So I would pretty much like to fuck that thing off by being just there in 2 days and fucking up all the bulls. And if we go there, they're not going to say the same shit again. So we'll see about that. I don't think the market is about to collapse, but just to set things straight, we've got lots of catalysts upcoming, and they might not be the good ones. So we'll see about that. The problem with the market catalyst is that you don't know about it until it's released. And among those catalysts, we've got multiple ones. So this is what's ahead on the upcoming weeks. First of all, we've got the Japanese yen is going to act. They are going to raise the yields. We expect the Bank of Japan to just change some kind of its behavior regarding full-time QE. I think right now they are about to change that. And if they do change that, I mean, this could be a real game changer for the market. They've been putting money out there and printing money out there for years, and if they're trying to wind off, might be a game changer, and it's hard to tell how the market will react to this. So I expect the Bank of Japan to make some changes early Tuesday, and then at the end of Tuesday, nothing close to consumers' confidence. We don't give a shit about this unless that number is disappointing, but I don't think it will be. But what's big day on Tuesday is just the fact that Apple will release earnings, and I think this one is going to be a fucking disaster. So we'll see about that. But if for some reasons Apple were to disappoint the market, just like the other big market caps have been doing lately, I think this is the one that is just going to trigger the bubble to explode. We've had a bubble regarding the giga caps in the US markets, and it already started to pop off. And we'll see how it goes on, but I think Apple could be the final trigger. Just Amazon just managed to hold it somehow, but if Apple is just failing again, I think this is one another that can take a minus 20% at least. It's been pretty much overvalued. We might be ahead of wave one, which means that we can break down supports, which means we could go down and below supports by a gap, and that would mean a surprise. So I'm full short on Apple, and you know that. I've not been hiding for this for a long time, but I think now is about time to trigger this. We've been pretty much further away in terms of stupidity and pricings. I mean, at some points, if it's disappointing, we're just going to fuck up all the bulls at once. That's the risks I've been saying to all of you guys for months. If you remind me, and of course you've got all the videos to assess that back in time, I said don't fucking buy those assets. If you just buy Apple, if you just buy Netflix, or all those bubble assets, you can wake up someday by a minus 20% drop. And actually, I always thought that this will be some kind of external element that will trigger this. Actually, that's just the earnings release that just by themselves will assess the fact that we've been pretty much fucking overpricing those assets, and that no one is ready to pay those prices again. Just like in Bitcoin, I mean, 20,000s were just meaning nothing in terms of pricings, just as buying fucking Apple above $185 per share, $5 a share, is pretty much out of nothing sense. Pretty much out of no sense. It's just seeing how much dumbs were ready to pay for this. And I think right now we might be able to find a price if for some reasons the earnings were disappointing. So it's dangerous to trade that ahead of the market catalyst. So this is why I suggest that if you do that, just do it with lower leverage, just being sure not to get trapped into some reversing structures that if for some reasons the number were outstanding, we could have an upward gap. So we'll see about that. So don't put too much risk in there, but I think shorting Apple might be necessary at that point, or having some short positions in there, at least to try playing that number. But be aware that this is highly speculative, so if you are trying to put so many stocks out there in a short position, be aware that if you take a huge loss in the end, that will be your problem, nothing close to mine. I'm ready to take a 5 to 6% upward gap if for some reasons I was wrong, and that's not going to cost me that lot. Once again, risk management is the key into trading. So anyway, I think Tuesday is going to be the big day. Tuesday morning with the Bank of Japan, and Tuesday evening with the release of Apple's earnings, and we're going to keep on pushing with Wednesday, when we'll get the Fed double down by Tesla at the end of the day. So Tuesday, Wednesday, obviously going to be the big game changers. And not just to stop, we're going to have another big day. On Thursday, when we're going to get everything regarding GBP, and I think that this is where we'll get the game changer regarding the GBP USD scenario, because we're going to have a rate raise in the Bank of England. And if the Bank of England is raising 25%, and if we see for some reasons that the Fed is not about to rise the rates in September, then we're pretty much going to have an explosion of GBP USD. And if we just forecast the Fed to rise in September, then we just got an upward move on the GBP USD. So I think anyway it's going to be bullish, and I think at some point we'll have to trigger the scenario on GBP USD. It's just a matter of time, and I think traders will try to anticipate before Thursday. And then in Friday, we've got the damn NFP to terminate the week. So if for some reasons everything was just doing wrong throughout the week, and for some reasons we had a downward, a lower than expected NFP, as it's already expected to be contracting from the previous weeks, from the previous month's numbers, and if for some reasons we were having a pickup into the unemployment level, which means if we're not 3.9, if for some reason we were above 4%, means that we'll be rising the unemployment for 2 months, 2 straight months, and that wouldn't be the big of a sign. That wouldn't be a good sign. Not to say that would be a worst sign ever. Pick up in inflation, pick up into labor market, or danger into the labor market, danger into inflation. These are pre-recession signals, and of course Wall Street will have to work itself out of it, which means all we've been forecasting, a 4% GDP and shit like that, it's not going to happen, which means we're going to have to review the profits, and we're going to have to review the pricings of the equities. So once again, as I said, for month, risk is fucking down the corner. If you think this is going to last forever and that bull market is not about to end, just don't be bullshitted by those who are trying to sell you those very high pricings. The only rational choice right now is just to either do nothing or trying to sell speculatively. But once again, speculative sales is something that you don't want to do with leverage. You know about that message. I'm basically drilling inside your head every day just to remind you this, that you can buy, but if you buy, do it short term, do it very smart, and just don't buy passive trading. Don't buy ETFs, don't buy stock indexes. Get to buy tiny targeted assets, the one that can produce gains, and there, that way I think you can still try to ride the trend, but that's the only way to do it. And be aware that this is going to be short-term sighted. So it's basically get in, take the gains, get out, and wait if you don't want to be a seller. And if you want to try to sell, then instead you want to sell the broad market, trying to find some respiration out there, some signs that the sellers are now at play. But be aware that this can be risky, because we are still having volatility sellers, people trying to sell the gold just to keep up the money into the stock market. So as long as they're trading that way and playing that game, the timing will be hard to predict, which means you cannot assess the timing. So you have to be some kind of broad in terms of scenarios. The boundaries of your scenarios have to be broadened, which means the stop loss needs to be further away, not to be taken down by those who are trying to fuck you up, and normally you should be out of risks. I mean, even if you're wrong, normally you should have pullbacks to get out at no cost. And if you're wrong in the end, and if you have to give a stop loss, be sure that this stop loss must not cost you more than 3 to 4% loss if that was about to be wrong-footed. because there are still pretty much risks to see a bubble showing up in Wall Street. But from what I can see, this is clearly not showing up signs of a potential bubble to create. All I can see right here is just exhausted bullish move, just trying to get up. But if for some reasons we find a way up, really, if you traded bearish just like I did, accept to give away the damn stop loss and don't hold the short positions. That will be the worst possible choice ever. If you were wrong, just accept being so, and just take a damn stop loss. I mean, in trading, you don't play God. In trading, you put a scenario out there. You trade that scenario with a decent risk management, and if the market proves you wrong, you just get the hell out. Okay, speculators who are holding the positions are the one who are doing the most stupid choices ever. Remember what you've been doing into Bitcoin. I'm talking like everyone's been doing the mistake in Bitcoin. Not everyone has been doing it wrong, but most of you guys have been doing it wrong when you were trading Bitcoin back then. When you were there, remember what you were doing. You were basically buying for some kind of speculative scenario. You were buying in here just to get the price to 22,000, so for example. So this was a speculative scenario. And then what you just done is just switching that speculative scenario to some stupid buy and hold. And so at that point, you've been buying in here or here, and you said, okay, I'm targeting 22,000, and I'm putting a stop loss if we're breaking down that low. And when we broke that low, you chose not to trigger the stop loss. And you said, no, I'm buying and holding. What the fuck? This is the worst choice ever. You don't buy and hold when you were targeting a speculative scenario. Speculative scenario means when you're wrong, you take the damn stop loss and you get out. That's how it is. If you're wrong, you're wrong. And if the market is just taking you down on a lower shadow candle after going up, then that's part of life. At some point, it's going to happen. But if you just do that every time, believe me, you're gonna lose a lot more by letting it go into some kind of buy and hold scenario after a speculative trade than just taking a loss right at the bottom or right at the top. It's gonna happen 1, 2, 10 times out of 100 shots, but means that 90% of the time you're just going to extend the losses to a pretty crazy amounts. And for most of you guys, if you've been trading with leverage, the market let you no choice and they took you out on a margin call in the next bottom. So be aware of this. Transforming speculative scenarios into buy and hold is just something that you can do if you haven't been trading with leverage, and even that is not rational. If you were wrong, just accept being so, take the damn stop, and just buy again later at better prices. This is the most rational choice. If you were trying to buy in here, just take the stop loss and try to buy here. I mean, think it that way. It would have been way more profitable, way more endable in terms of psychology, which means right in here you wouldn't have been in some kind of panic buying, panic selling, or whatever action you were doing back then. You would have just been straightforward, putting a new plan to buy at much better prices. It would have been a lot easier. I mean, taking the stop loss in here, you just had a pretty easy job to do, forecasting what the next supports will be. You have one support in here, you could have bought that lower shadow candle, would have produced a gain, then a stop, but no problem. It would have paid for that gain, for that loss. Second way, you would have put a support near that area regarding the volume. You would have bought that low, and it would have been a good one. So you'd have taken a gain that would have entirely paid for the loss you could have made in here. So instead of just fucking holding and taking a big loss in the end, you would have just taken a tiny loss and then a gain to cover that loss. Just by getting out, accepting being wrong in terms of timing. Being wrong doesn't mean your entire scenario was wrong. It just means that you were wrong into timing. You just have to let some room for the price to work the area, and then you can trade again. Just gonna give you another example. If I just made sell and hold the last year, I would have been ruined. I mean, I've been selling in here, selling in here, selling in here. Imagine what it would have been like if I just holded those prices. I mean, if I transferred my scenario to a hold all thing, I would have just been ruined by the market going up there. Clearly. But what I've done is selling stop loss, selling stop loss, selling stop loss. I've been triggering so many stop losses in 2017. That was just driving me crazy at the end. Even there, I've been trying to sell and put a fucking stop loss at the when the year started. I expect the market to just collapse on Monday, on the day right after the new year. And on the opposite, the market woke up again and just piled up straight days forward. I was just there like, oh shit, how long is this going to hold until I get the right pricing? And then I tried once again right up here and got it right. And this has been just flushing all the losses I've been taking by a fucking nasty gain. So once again, I was right multiple times into timing because the market just went crazy last year. But in the end, I was right, and I just took the gain. That's how it is. I mean, accept being wrong a few times, and then anytime the strategy is applicable and you can apply the strategy, just go ahead. I mean, that's how it is. I'm not changing my mind. When I have a scenario, as long as that scenario is still viable, I'm trading it. But I'm trading it with timings, knowing that no matter how, no matter what, that timing is never a certainty. I can be wrong into timing, but obviously, generally, when I'm doing my job right, I'm going to get right in the end. And all I care about is that moment when I'll get right. And it can go wrong multiple times before it. Anyway, it's going to be profitable in the end. Just to be straightforward with you guys, normally I can be wrong 6 times in a row and still getting profitable, not even reinforcing the speculative position. Means that generally, as I do trade a 1 to 5 ratio, which means I'm risking 1 to get 5 in gains, means that I can be wrong 6 times in a row. The 7th time is going to fill up all the losses I've done previously. But the thing is that when I'm speculating, I'm taking reinforcements when the trades validate. So I'm taking a lot more gains because when the trade is validate, I'm getting more money in and more leverage to get more gains, which means in the end, when a scenario is going through the entry to the target, reinforcements included, I'm generally taking 12 times the speculation amount, which means I can be wrong 11 times in a row and still be fucking profitable. So I hope that this way you guys will understand how I do see things. And the fact that when I speculate, I don't fear being wrong. I don't even care about being wrong, as long as I'm not wrong 11 times in a row. So you're not going to be as precise as I am, which means 11 might not be your number. And as you are less experienced than I am, you might be nearly about 5 times in a row. But if you're doing wrong 5 times and getting it right the 6th one, then you're still profitable. And that's the only thing that matters. If you matters being right or wrong, you just don't get what trading is about. Trading is just about finding a timing by speculating, and whenever you speculate, you must accept being wrong. Anyway, that being said, I think we're going to terminate in here today because I don't have much more things to add. The fact that we've been already talking about everything. Right now it's just about gold and trying to figure out if Wall Street is trying to sell gold again to get some money to flow into the equity market. Because people have been buying gold. It's obvious right now. We can clearly see it in terms of pricings. We've got bullish guys who've been trying to support the prices, and then we've got some kind of bears trying to take it over with that bearish engulfing, but didn't work out the way they expected, because the day right after, instead of making a down candle, what we've made is a pretty much doji. So right here it's a 50-50 kind of scenario. Either we're going there and we'll have a lot more stop losses to trigger regarding the gold, and probably I'll have to trigger mines as well. It means that we're going to fuck up that support, and probably this one as well. It means that the next target is right here, and to me that means obviously I'll have to take another stop loss just to buy at lower prices again. Okay, so I will see how it plays out. It's either just a trap and Wall Street is going to buy this instead of buying the equities, and in that case money from the equities will flow into gold, flow into yen. We've got a lot of room in here to do it. It's just a switch. Wall Street can switch to risk off or keep on pushing to risk on. And if that's the case, they're going to take the money where they can. It means they're going to try to fuck up the buyers in gold and take their money to buy equities. So we'll see about that. I really don't know. I mean, Wall Street is kind of an all-in mode right now. It's just like nothing can do anything to Wall Street, but we've been proven wrong later the next week, on Friday of the previous week. So we'll see if this was just a sparkle to enlight the fire, or if this was just another buy the pullback. So we'll see about that. I really have no clue about what Wall Street is going to do out of it. All I know is that the gold somehow is going to be the game changer. If for some reasons Wall Street is just getting out of equities, purely the money is going to get into gold. And all the metals that have been oversold, including silver. Probably, if they want to go up, they'll try to buy some US oil and just fuck up all those who've been selling. So we'll see about that. For right now, all I can see is just we're just trying to pull backing in here, and anytime we're going to get to that resistance, I'm going to take a short entry, which means if US oil is down, if gold and silvers are up, it means that Wall Street's down at some point, and they've been fighting against that for months. But that doesn't mean that in the end they're not going to surrender just a few days out of August. I mean, that's how it is. We can just surrender right into August, just like that. And all that seasonality fucking thing that the market has just been trying to sell you recently about that thing, that if from April to August we're just bullish, then we're going to keep on being bullish till the end of that year. That's just the most stupid buying scenario I've ever seen. I mean, do you even do that? It's like the sell in May and go away damn thing. I mean, do you just apply that as a trading strategy and saying, okay, we're in May, so I'm selling right now because of the because of that sentence? No, nothing close to it. I mean, you're not selling just because it's said that in May you have to sell and go away. No, give a shit about that. So what would you give a shit about if we have been making a bullish summer, then we'll have a bullish end of that year? What does that mean? That you have to buy just because of this? Never mind, no close to this. So anyway, so watching out for gold and silver right now is interesting, and consider it as US oil as well. It could be interesting. Regarding the forex market this week, I'm only taking care of GBP USD, and I want to see this one triggering. Regarding the euro yen, I think we're having the pullback I expected. I've got bullish engulfing today. We'll see how the candle will close, but I expect the euro yen to keep on pushing up and getting to either the running flat pattern, which will be right here. So what you do generally in here is taking this down to the bottom, and you're forecasting. Okay, I've already done that, actually. Yes, I've anticipated this long ago, of course. So this is 161 or 100. And the fact is that either we're going to finish in here and sell again, and this will be a running flat structure. But remember that with the C wave must be done into 5-wave structure. And clearly see we've been making wave 1 in here. We're doing wave 3 currently. We'll see how deep this wave goes. If wave 3 is terminating in here, we mean we're going to sell that price. If we got wave 3 terminating in here, pull back, and wave 4, I'm going to get to sell that 100% extension. So it's either there or there to me. These are the two prices I want to sell. I look for sales, to be honest. It's a pretty much different thing. All right. So this is how it goes. In a very dangerous perspective, we could even consider going all the way up here, which is 261% extensions. It's really a rare case scenario. But we wait for a 5-wave impulse. But to me, this is where I'd like to take the short entry. Right in here. And anyway, the stop loss must remain at the highest price for now. It's just taking reinforcements and then getting full short. Whenever we break that low, it's where I get to maximum leverage. AUDNZD must be watched for pretty closely right in here. So if for some reasons we were to invalidate, as you've seen, we've had some catalysts upcoming in the AUDNZD thing, which means if for some reasons one of those catalysts were pushing the price to the downside, I'll have to trigger some stop losses just to once again buy at lower prices afterwards. I want to buy that thing, and there's no reason for me to get into selling it. It's just either we're finishing the consolidation and the catalyst will push us to higher pricings, which I'd like to see. But if that's not the case, and if the market is choosing to do otherwise, then no problem. In that case, I just give away the stop losses just to buy at better prices. I'm still remaining waiting in here to get a price signal. What we're having right now is pretty much interesting. We're working out the 76.4% retracement area, and as you can see in the daily chart time frame, what we're having right now can be interesting. If for some reasons that went to be a bullish reversal structure, I'd like to see a bullish engulfing today. If for some reasons we were failing and getting back to the lower shadow candle, I think we're going to have to extend to that next area in which I'm ready to take a buy entry. But I need to have a signal in here, which means we will be right into the breakout target with an 85.4% retracement level, which means this is the last level I'm ready to buy. Moreover, that is supported by a bullish trend line, long-term trend line. So we might find some support in here with a decent stop level, which means the stop is in here and has to be there, but that can be interesting some way into the USD MXN scenario. If of course in here we find no bullish confirmation on momentum, I will not get into trading. I'll of course let fall that shit and just don't know where to buy. But if I having clean, I don't want to have a taking profit pattern on momentum, just simply say. I really want to have some bullish or exit or anything like that, but not taking profit is not going to be enough. Okay, I want to have a clear, nice bullish pattern on momentum right into that area or next to that area, and I'll be ready to get in. I'm just watching closely if I have any other scenario to trigger. Yes, okay, so this clearly wave 1, wave 2, ready for wave 3, ready for a fucking bearish drop, and I expect Apple to eventually just get there today or on Tuesday, which means as well in here a minus 20% drop is absolutely possible. If you look at the structure, sorry, I'm looking at NVIDIA, but this one is going to release soon as well, and this one is pretty fucking bad shaped. So we'll see about that, but anyway, this thing remains pretty much bearish. Yeah, sorry, let's have a look at Apple. Yes, Apple. So in here as well, we're terminating wave 5, got taking profit pattern, everything's fine. We can go slightly higher if the release is good. For some reasons, we could just go there. So this is a price area I'm totally accepting the price to go to. And anyway, if we're getting in there and having some short signal, I'll get in there as well. We're already having the momentum reversing and making new lows, which means the catalyst is ready and all the scenarios are open-minded. We have a fucking gap in here, and I think that's the first target for us. Heading toward that gap and gapping below this, which means if things go wrong, it's minus 12% at least for Apple, and as we have so many fucking stop losses to trigger below that low, I think we're probably going to have to open lower there, which means a minus 20% drop approximately is possible with Apple. And if we're doing it, remember that for those who've been selling, we'll have to trigger some partial taking profits down those prices. If Apple is gapping down 20%, don't forget to take the profits. Doesn't mean that we're not going to go lower, means that you'll have to take partial profits at least in here, because we might have some pullbacks. Okay, so just be aware of this. If Apple is dropping 20%, don't forget to take the gains. Not entirely, but take it at least 50%. At least that's the way I'll do it. I mean, that's good. I think that we'll have to watch out for the 10-year yields. I think that we might have it going to the downside. It's up to the Fed. We'll see about it. But I still forecast us to just normally should release the pressure on yields regarding that 4% GDP and get us down here, and that should force the prices to consolidate into equities, but consolidate, not to just flush and fall apart. As I said, if we're just falling from here, I don't expect the price to drop 20%. I expect the price to retrace back to the major support we've been building earlier that year, just slipping a little bit below, for example, if we have some stop losses to trigger. But that will be just it. I think if that's the case, if we're not making new highs on the SPX and falling right now, this will just be a range fallout and basically falling fucking volatility manipulating to make a very long pullback and painful for the sellers, but actually we'll have the pullback anyway and just be first bearish impulse, very complex consolidation fucked up by all the volatility sellers in terms of timing, and then second bearish impulse out of nowhere for what God knows what reason. And if we go there, we'll trigger all the fucking bullish stop losses at once, but that doesn't mean the market will collapse. It means that we'll still have buyers, me included, to buy the lows. I will buy very low leverage because once again, if we do buy in here, the wave that could follow will follow through 2019, but that will be the final wave. We mean if that is the scenario, if for some reasons what we're about to do in here is just A there, A, B, C wave, buying the support, getting to historical highs up here, right here will be the big short scenario, which means buying in here will be the final buying opportunity out of indexes, okay? And right in here, I'll get bearish in the entire economy and bearish in the entire US indices, okay? So this was one of the multiple scenarios. I said, I think 2018 is going to be a range scenario. And from what I've been seeing recently, I've been seeing too many bullish optimism, and that made me introduce some doubts into my strategy and the fact that we could eventually make the new highs. And then if that's the case, I'll be ready to move on to the end of economic cycle scenario, which means I'll get into the big short earlier than expected. Even though I've been saying this for a long time, I expect it to be 2019 and nothing close to 2018, unless we manage to get to the historical highs. In that case, if we fall apart before the 31st, I'll be ready to get into the big short. Okay, so I think right now what we're having in here is pretty much indicating that we're going to get back to the blue area and probably a little bit lower just to trigger some stop losses. But if we go there, I'm ready to buy again, just as expected. A, B, C corrections. That's what I said out of the first day of 2017, of 2018. And if that's what the market is just choosing to do, then I would just be right out of every fucking bullish guy who are just trying to hold the market and just bought the lows forever. They're going to lose all their gains into a single day, and I'm going to take a fucking nice gain in a single day if that's what's about to happen. Because we can pretty much have something like that. 2 weeks, pretty much fucking bearish, taking down all the stop losses at once. I've already set the prices area in which all the stop loss may trigger. First stop loss range will be there, second one right in the middle of the range, so please don't buy those supports. We're clearly even not about to have any signs of pullbacks in here. It's just going to be in a straight line taking short term. I think right now short term stop losses might be there, so short term stop losses, mid-term stop losses to trigger, long-term stop losses to trigger, and then the market might be able to pull back. Okay, and really this is the way I see it. Going all the way down once again, making the final wave 5, making historical highs, and then collapse. And this big short, this one's big short, okay? This one's the one you sell and hold. I think the sales we have right here, if these are the range sales, means that we're still bullish afterwards, and we'll still have some potential. All right, that's more than enough. I'm going to get to the questions right now and move on to other things. So that age comes from inflation flow, the ability to correct your habits in terms of the market characteristics and being able to learn from people who know more than you. I came across a video in March early this year. I found so many people giving praises to a man named Heathen Hands. Okay, fuck it, you're still there trying to sell things, so get the fuck out of here. When the take bubble burst, what happened is quick as the Facebook pull down. You won't even have time to react. Yes, and as I've been said, I said that multiple times. If you're getting into those assets, you have to be aware of the real underlying risks, which is you might be waking someday with a minus 20% drop. And I kind of think that right now people are aware of this. Yes, patience is key. It's really something that you'll learn the hard way, which means you're going to make mistakes, getting better out of those mistakes, practicing, getting better, practicing, and eventually someday you'll learn it the hard way that patience is necessary. On crypto, I don't think there will be good performance for the icon on this bump. BTC is low on Julu, was way lower in the main, the main altcoins, so there more room for BTC for a decent bump. Last bump on last April, alts performed better than BTC, so to obtain better performance, traders bought alts instead of BTC. So there are no more traders wanting to buy alts at price of flat even when BTC grows. Don't expect. Okay, that's an understandable scenario. As I said, that will be your invalidation. Your scenario will be my invalidation. So it's just you and I have different approaches in here. And once again, I just don't trade what I think. I trade what I think plus what I see plus the signals. I think I've reduced my risk enough to try buying those assets. But once again, what the market will do in the end is just depending on the market itself and nothing close to the analysis I've been making. So I can pretty much be wrong, and if that's what's about to come, then I'll just take a stop loss. But once again, being stopped out on Ethereum, IOTA, and Ripple is not going to cost me anything. It's going to cost me nearly nothing, and I've been making 5 to 6 times more gains by buying the Bitcoin. As for I hope you can figure out right now why I'm saying this. Because in Ethereum, I've been taking a single reinforcement so far, but at a pretty decent price, which means that reinforcement is probably going to be taken out at no cost. Meaning, I'll exit that entry for $100 loss. At best. IOTA is not going to cost me that much anyway as well, and I haven't been putting that much money in there. Ripple might be costing me a little bit more than expected because of the stupid mistake I've been making, but that's all. I mean, in the entire thing, if all those 3 are failing, it's not going to cost me more than a third of what I've been gaining into Bitcoin, for a simple reason. When I got right into Bitcoin, I took reinforcements that made me produce a lot more gains when the scenario validated. I'm about to do it as well. As I said, if those scenarios are about to validate, I'll take reinforcements on Ethereum, Ripple, and IOTA, and I'll take nice gains as well. If I'm wrong, I'm just going to take down the losses. And that's how it is. And if I had to make the same choice tomorrow in a different situation, I'll just do the exact same thing. If I have buying signal respecting the strategy, I'll take those. If I don't, I'll just get out. From what I can see, we're having bearish signals right here in the Ethereum, which shouldn't lead me to being bullish or bearish, but the fact is right now we're having a squeezing momentum, so we're nothing close to any kind of bearish confirmation. We're just purely neutral, waiting for the prices to outburst. It's going to be bullish or bearish, but at that point I'm already in, which means I'm just waiting to have the release. And if I'm right, it's going to be good. If I'm wrong, I'm going to take a loss, and that's how it is. Okay, so bye guys, and please, if it goes to the downside, don't hold the bullish entries. That will be the most stupid choice. We're having a bearish momentum. We're having a bearish sine wave. We've got a neutral momentum, so it's just waiting to see if the momentum is contradicting with a sine wave, and in that way we're going to have a bullish outburst, but limited outburst, as sine wave is bearish, and when sine wave is bearish, prices cannot go up forever and to crazy high pricings. So really, to me, this is maximum prices we could get, 6,600. If we go there, I mean, there is no chance for us to go higher than that, or at least if we do, it will be really marginal, and I don't think that we can reach out 61%. Bitcoin could, but I think the altcoins doesn't have that strength, and 38.2 retracement will be more than enough to me to take the gains out of that party. Anyway, bye guys, and wish you good trades. Be safe this week. Be aware that it's going to be tricky, either into the cryptocurrency sector, but moreover into the standard financial sector because of that big Apple release. I mean, I've been waiting for years to see Apple falling apart, and I can see that this is probably about to happen today, or on Tuesday. So we'll see about that. I can be wrong once again, and in that case, that means I'll have to wait for extended quarters ahead to get to failing Apple at some point and showing them giving some concerning numbers. Okay, I know they've been messing with their numbers for quite some times. They're not selling that many iPhones. I know that for sure. I have inside intel, but Apple is just messing with the numbers for quite some quarters. At some point, it's going to have to show up, and the day it will, I don't want to be a buyer of it, but most likely be a seller But once again, don't know when it's going to show up, but I think it will be. Okay, so could be today, could be on Tuesday, could be Tuesday a quarter. Could be a quarter ahead, maybe a couple quarters ahead. But don't be a buyer of Apple. Believe me, that's a real danger playing bullish out there. So bye guys, and see you later.